What we'll be talking about today, it will be strictly money management, yeah, risk management. That's what we'll be doing today. Yeah, yesterday, I hope everybody went back and do the research on the time zone, the proper time for you to take a trade, how you trade each currency. Now, this work with the market correlation, whereby you guys know the right time to trade each of these particular pairs. I believe everybody at this moment should know the right time to jump on any particular pairs if you want to trade them. By this At this time right now, you guys know the right time to trade any pair you want to join, any pair you want to trade. You want to trade pounds, London section. You want to trade USD correlation, New York section. You want to trade Asian pairs, JPY Asian section. You want to trade New Zealand or Australian dollar Sydney section, right? I believe everybody knows how that works right now. Perfect, perfect. So now before we move to the strategy part, the strategy aspect, now this is just like a quick brush up of how the strategy is going to like be working, right? Because it will make sense, as I always say, for you to learn the strategy and you don't have the idea of this. Before we go to the strategy, just have like the key sources to this point, the key sources to being a profitable trader. Now that's what we are doing right now. You having the knowledge before we get to the main strategy part, which is the technical aspect, practical aspect, right? Now today is the money management. Money management. How do you do this? Now this formula you can use it for any of your this formula, you can use it to any of your trading accounts. So far, you got a trading account, right? You can use this formula to it. Now, first rule when it comes to money management, if you're my student, right? Your first rule should be now your money management works with your trading psychology. It works with your trading plan. Now, when you're creating a plan for yourself, you need to get to a point like, okay, you have some strict rules, discipline. Now, all the branches of money management, what is the most effective uh use of it? Money management is equally discipline, right? That is what money management will show you. Your trading plan on tact, then equals to discipline. Because if you're disciplined, you will trade what you have in your account. But overall, like we all movements, yeah, everybody wants to make it big. Everybody wants to make huge money. How can you take advantage of the market? How can you cheat the market if you want to make it big? Okay, now let's reason as a businessman, right? In the market, reason as a businessman, you want to do a business, you're investing like $1,000 in a business, right? If you're paying $1,000 in a business, if you're paying $1,000 in a business, obviously you wouldn't want to make less than what you're putting. You have to reason this, right? Okay, if I'm starting this business with $1,000, I want to make $2,000, right? You want to make $2,000 and above. And if anything is going bad, if anything is going to bad, like if this business is going to fail, you want to at least lose $500. Or if you even though you're going to lose the $1,000, you have a target to make above more than the what you're projecting. So in this, what I mean basically is when it comes to risk reward ratio, your reward should always be higher. That's the way you can cheat the market. Make your reward higher. Make your reward higher. That's the way you can only cheat the market. When you make your reward higher than your risk, trust me, everything you're going to be thinking about in the market is a good risk management, a perfect good risk management, a perfect good risk reward that you can jump in. Just like you having ratio 5 to 2, ratio 5 to 1, 4 ratio 1, that's some crazy level of risk management there. Now, everybody believe in the market. Firstly, I want you guys to take it this mentality of what everybody knows as money management. I'm sure everybody think this is money management to them. What you all think as this money management is what you all think as money management is basically using smaller size. Am I right? Everybody think that for you to have a perfect money management, you have to be using smaller size. Your money management knowledge isn't it not to be using smaller size? Obviously, that's what everybody thinks. But come on, we are in the market, right? Everybody wants to make it big. If you're using 0.001, when do you think you want to make it big in the market? Of course, it will take you time, and that was 0.01 is not sure that you'll be making as much as you can even grow your account or have straight win all the market. No, trust me, there's one thing I've realized in the market, right? Over the raw, you cannot have like consistent straight win like 2 months. You can't. You surely have a bad week. And when you have a bad week, you should know how you correct that. You should know how to like treat your bad weeks. You should know how to like stay in profit, forever stuck in profit. So this is your ideology. Let's use let's use a $1,000 account, for example. $1,000 account. Let's say we all got $1,000 account here. $1,000 account. How do you trade this? You appropriate lot size for this is 0.10, right? Appropriate lot size for this is 0.10. Nah, me, I wouldn't use 0.10. Why? Because it's boring to me. You know, right? It's boring. And how much do you want to make? How many pips do you want to catch to flip your $1,000 to double? No, it's gonna get boring and you end up even losing. You might not lose at once, but if your winning rate is not that high, you end up losing the money and you don't make profit. You just end up wasting your time. So now remember the first rule. The first rule of your money management: maximum of 20 pips stop loss. 20 pips stop loss. This is included in your trading plan. Maximum of 20 pips stop loss. That is included in your trading plan. Now you have to stick to this rule. If you're my student, you have to stick to this rule. There's nothing gonna make you profitable if you don't stick it to this rule. I'll share something to you guys at the end of the class. A mistake that I made yesterday, which cost me a lot, right? If you don't stick to this rule, if you're not firm with this rule, you're gonna keep slacking. You won't be like straight. Now you can keep your record clean. You can keep your record of your accounts clean by following this simple rule. Now, when I mean maximum of 20 pips stop loss, it means that in any decision you're taking in the market, it's just basically 20 pips stop loss you're using. So even though you're going to lose the money, you know that you're not losing more than 20 pips in the market, right? You're not losing more than 20 pips in the market. Maximum of 20 pips stop loss. This is what you're working with. From now on, if you have been using more than 20 pips stop loss in all your trading or in all your setup, change your mentality now. Now, the whole idea is cheating the market. Remember, cheating the market. Risk small to win big. Risk small to win big, right? This is the idea of cheating the market. How can you do this? Now, your first rule is adapting to this maximum of 20 pips stop loss in all you're doing. I will tell you, the profit is secondary. Profit is profit is secondary. Don't consider the profit first. The profit will come. Trust me, the profit will come itself. Just follow this rule. Profit is secondary. Don't make profit as your basic thing, your first thing in the market. Your first decision in the market should be protecting your capital. Your capital is your interest. Now, I will teach you the formula of compounding your account. How can you actually be successful in the market, like grow your account overall time? The formula I use. So now in this situation, now you're already using 20 pips stop loss in anything you're doing. Now you're going $1,000 account, abiding with this max of 20 pips stop loss. Now, as me, you know the appropriate lot size for $1,000 is 0.10 lots, right? And if you're using 0.10 lot in any trade you're taking, that means you're going to be losing max of $20 per trade, right? Right? Everybody's following. If you're following, let's make this interactive. Maybe you should omit yourself if you're not like making noise on that. If you're using 0.10 lots, in any loss you're making, maximum loss you will ever have is $20, right? Now, but look at this.
Yeah.
You're using 0.10 lot size, it will get boring. How much do you want to make in a week? Probably you do well, you make like $100 in a week. But when it comes to flipping, When it comes to flipping, guys, now if you have the strategy, you know the right time to trade, you have a good entry, you're a sniper trader. Trust me, 0.10 will be like the list of what you're using when you have $1,000 account. Because why, you now have to take advantage of your account that you have got. Now, for me myself, if I got a $1,000 account, because I want to flip it on time, trust me, this is the lot size I'm gonna use. 0.50 lot size. Now, as a sniper trader, I'm trying to cheat the market to make more gain than my loss. Now, remember, I'm still working with the 20 pips stop loss, right? I'm working with the 20 pips stop loss. You all know that if I'm trading, yeah, and you make 30 pips per day with 0.50, that means you're earning like $150 on 30 pips, right? So if you're working with your stop loss, that means you're losing $100 on 20 pips per trade. Makes sense. Now, I'm using 0.50 on $1,000 account. Definitely, you want to like make more money. Now, this comes to a sense whereby what is your winning percentage? How sure is your strategy? If your strategy is quite sure and is quite like outspoken, like is proven, then come on, you can do this, right? You don't have to like get buried in the market using some damn small lot size. You won't make money, you won't flip like that. Now, I'm using 0.50 on $1,000 account. What's in my high chance? Definitely, I have high chance of blowing this account as soon as possible. And at the same time, I have more chances of winning. To me, in situation of my case, right? I feel like I have more chances of winning in the market than the losses. That's basically how I feel in the market. Because I think it's hard for me to lose in the market, easier for me to win. It's just all about mindset. The way you see in the market, the way you believe in yourself. It's all about mindset. Remember. Now you're using the 0.50 loss size. Now, you're using maximum of 20 pips stop loss. Sometimes you can have a setup that is just 10 pips stop loss, right? You can always do some crazy shit in the market. You want to become a professional trader. Now, don't even look at the money aspect. Play with the chart. Take a trade with less than 5 pips stop loss and let the trade trigger. Take a trade with less than 10 pips stop loss. Let the trade trigger. That is what makes you a professional trader. It's not about how much money you make. It's about how you can deal with the chart, right? Then if you can deal with the chart, definitely the money is coming. You definitely make the money. So deal with the charts, ride with the charts, do what the chart is saying. Don't look at the money aspect. I'm sure, like, okay, everybody's concerned about their money they put in the market. You don't want to lose it, but at the same time, do the right thing, what you're supposed to do. Now, you remember your take profit has no limit. If you're using 0.50, your take profit has no limit. But your major loss is 20 pips. Now, let's say you're using 0.50 and you're lucky one day, you got like in a day, maybe someday you got like 50 pips. You got 50 pips, take profit in a day or someday, right? That just literally made it $250. You have 50 pips take profit, you have made $250. And if the trade has gone against you, max you will have lost is $100. Now, if I'm using this, that means that I have 10 chances of blowing this account. If I'm using 0.50, I have 10 chances of blowing this account. If I'm using 0.50 lot size, I have 10 chances of blowing the account, because if I lose $100 10 times, that means the $1,000 is gone. Now, as I said, this now has to work with your winning percentage, how good you are. If you're very good, if your winning percentage is like 70%, like give your 70% winning winning rate, yeah, 30% loss loss rate. Definitely, you will have taken this trade. You'll have taken this trade 7 times and you won and lost 3 of the trades. That's what makes you the real badass in the market. Now, with this like this, you've just cheated the market because you're using 0.50. You've already made more than what your account can provide for you in a week, or more than what your account can provide for you in a month. I'm gonna share something with you guys. This is just like the 3 weeks or second week I'm trading on this account. Now I'm sure everybody has been following on this account, this $20K account, right? As I said, it's just simply the same formula I've been using. Now, on a normal $20K account, you know the right lot size is two lot size. If you check my history, you'll see five lot size. The highest lot size you see is five lot size. Now, I have a plan myself. You won't see me using three lot size. You won't see me using four lot size because I have a plan I'm working with, right? Is either you see me using the two lot size or you see me using the five lot size because I have a plan. I won't just take stupid risks just to blow my money. Now look at you over just 2 weeks, withdraw I've withdrawn more than $16,000 on 20K account, right? Now, as I said, I'm going to show you guys how to compound your account later on. How to compound your account later on. Because everybody has this bad mentality of like keeping your account, your profit in your trading account. No, you don't have to do that. So far, I believe everybody understand this kind of formula I try to bring to your mentality, to change your mentality about money management, how you think of the trade.
So basically,
Yeah.
is it is it like mandatory? I have to use, like, if I really want to flip my account, I have to
What is
use
it?
so like, is it like mandatory for me to like use till five, like 0.50? Can I still make it like 0.20?
Yeah, sure. You can
Just
make it any loss
go
size
with the
for you.
tips.
Now I'm not putting the lot size like mandatory for you. Now you
I
have to
feel
just
yeah.
work to the plan. Calculate. If you're using 0.20, that means 0.20 pips stop loss will give you $40, right? $40
Yeah.
per loss is fixed. That's your calculation. And 0.20 can give you more than $40 depending on the pips of your take profit, right? And one thing in the market, learn to like take profit, even though it's $1. $1 is better than a loss,
Fact.
right? So in a situation yesterday, like the first class we did, you said that if you have a winning trade that's going in winning and you didn't end up taking the profit, then reverse back. The best decision you can do is just close out the trade in break even or small loss or small profit. Don't hold the trade. Why? Because it has had a reason for it to have reversed back. Then that is a new momentum which you might haven't seen in the market, right?
Yeah.
So do you understand now? Malik, are you there? Malik, Miriam, Kola, Shola, you guys there?
Yes. Yeah.
Do you guys understand this money management aspect?
Yeah. Yeah.
Okay, perfect. So let me share you guys this to compound your account. Now I believe this, yeah. If you have a $1,000 or you have any trading account, you're making daily profit. The best thing is I would suggest you to wipe out the profit, stick to your plan. Now you already have a plan for $1,000 trading account, right? Any profit you make daily, wipe it out and stick to your plan. Just stick to your trading plan that you have created for the $1,000 account or any particular trading account you have got, right? Wipe the profit out daily, wipe your profit out, withdraw weekly, recover. Now the best thing is try as much in trading. If your capital is $1,000, make sure you make your capital back first in the market, yeah, before you think of growing long term. Make your capital back first in the market. That's the best way a businessman should think, right? Don't be saving because you want to grow $1,000 to $10,000 account one day. No, no, anything can happen in the market, right? Anything can damn happen in the market. So don't be compounding account like that. Make sure you recover your capital, collect your capital, then use your profit to keep trading. Stick to your rules, withdraw your daily profit, withdraw weekly profit, and keep on smashing. Stick to one plan. Okay, I have a question. How many positions can I open on $1,000 account? Now, best thing is your risk management is proper because you're using 0.50 or something. If you're using higher loss size, especially more than the appropriate loss size, just open one position. Because if you open multiple position, that means you're increasing your risk on particular trade. Your risk, you're increasing your risk on one particular trade. Now, you don't have to die on one particular trade. There are still so many opportunities in the market, right? Don't let just because of one pair run you out, right? There's so much opportunity in the market. So stick to one or two position at least, at most. Do you get that, Scholar Ole? All right, all right. Bet this is getting interesting, guys, right? I want to end this right now. Malik, trust you gain some knowledge. I'll share the link of this video. You can rewatch again if you don't understand.